All right, today we're going to focus on energy stocks in general, and not just oil. Let's get into it. Fun fact, although oil and gas companies have directed roughly 88% of their donations to the GOP, their stocks have historically generated stronger returns under Democratic presidents. Kind of makes you think that they should probably focus more of their energy toward their core business than politics. But that's not what we're here for today. Let's get into our topic. So what I want to cover today is essentially, where am I putting my money for the next few years as far as in the energy sector or energy adjacent sectors. And really, I think the first topic that I want to cover is the fact that, well, there is going to be another administration in 2 years. And given all the things that are happening in the Strait of Hormuz and the fact that we're very much oil dependent country, and you're seeing what's happening in China, and they're withstanding this much better. And it's very much because they have grid resilient energy. What we've been calling green energy, but for some reason green energy has this woke connotation, but it shouldn't be woke. It shouldn't be political at all. It's good policy to be able to be resilient of energy or different forms of energy. If one goes down, you should be able to use a different form of energy. So I believe whoever runs, it doesn't matter if it's for the GOP or the Democrats, they're going to be running on a policy that says that we need an infrastructure that has solar, wind, uranium, thorium would actually be up there. I don't know if that'll be up there, but that'll be very interesting if it actually goes up there. If anybody doesn't know what thorium is, very interesting technology. Some people are, I think Bill Gates is actually investing into it. It's quite interesting right now. It's very much more experimental, but very interesting. You should look into it if you haven't looked into it. Anyways, so the political scene as far as the next election season will start spinning up, I would say, in about 2027, which means people are going to start talking about this in 2027, 2028 especially, which means the time to start putting money into sectors like solar, like uranium, like wind is now. Start cost averaging in just a little bit. I'd say over a year time frame, every month, put a set number of dollars of your portfolio into, I'm going to do probably a good amount into each sector, but solar is going to be a big sector, for example, and just say, I'm just going to say a number. Let's say $1,000 a month if you can afford 1,000, or 10,000, or whatever you might be able to throw in. $10,000 a month, put it into solar. And I have several different investments that I'm going to throw it in. Some are a little bit more risky, and some are more like the ETF side. But anyways, throw those in every month. And at first, who cares about the gain? Who cares if it goes down or up? What's eventually going to happen when the political folks start talking is these stocks are going to gradually rise. And once we get to about November timeframe, November of the election season, that's when the election happens. These stocks are just going to be going to the roof. And I think whoever gets elected at that point, it's going to go down a little bit. I think that's what typically happens. And then it'll just go right back up after they get elected, because policy will probably meet whatever they ever saying on the campaign trail. Because I really think this is going to be a big thing that whoever gets elected is going to try to get passed through. And these stocks are just going to run really well. So anyways, let's get into the meat and bones of this. So here's a stock that I'm going to be looking at. First Solar looks like a stock that has a very high potential of going. It's pretty volatile right now, but I think I'm gonna like that. I wouldn't be throwing all my money into this stock, but it's definitely going to ride a wave if the Democrats get into the office, and probably even the Republicans, but whoever, not with Trump, but either way. First Solar is a company that I'm looking at. The invest for as far as ETFs, the solar ETF that I've been throwing money into is TAN Invesco. It seems to be doing quite well, so um, been my choice. And then Enphase. Enphase is a company. I have a love-hate relationship with Enphase. I believe, well, they have went down, 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 down. I do believe they've hit rock bottom and actually have came off rock bottom already by now. They may go down a little bit more or up a little bit more. But I don't think they have much further down to go. I think they were up to somewhere around 400, I believe, a few years ago, and now I think their rock bottom was 35, and I think they're in the 60s right now. I'm not exactly sure on the actual numbers. Either way, they are far enough down, and they have a way up to go if a Democrat gets into office. So I'm very interested in. Here's something I actually want to show you. I have a friend that gave me access to his new startup that he has. I don't even know what it's called. Let's go over to his little stock thing. What's his site called? Actually, it's called understandstock.com, and it's a little AI stock analysis tool. And what I did is I put First Solar in to analyze, and I asked it how would it do if a Democrat got thrown into as president. And you can see here it gave a really nice analysis. Right here it says First Solar is more than almost any large cap industrial company, a direct beneficiary of democratic energy policy. Then it goes on to talk about how a certain credit that would be impacted, that would directly impact First Solar, and other different legislation that goes through the White House and whatnot that will impact the stock price, which is really an awesome little tool that my friend created. To be honest, I have not paid for this tool, but he is not paying me to say this. He doesn't even know I'm saying this, so it's my honest opinion. My first analysis of this tool is quite neat. I want to play with it a little bit more. I am at my monthly limit, so I'll probably be asking him for a little bit more credit, see if I can get him a little bit more free time on it, because I did not use it too much, but pretty neat tool that he built. Anyways, I thought that would be neat to show you guys. Wind. Wind is another place that obviously is going to have money being thrown at it with the next president, whoever gets elected. Here, I only have two ETFs that I looked at, and I just looked at the expense ratio for the most part. And there's two that I saw that the smallest ETF or the smallest expense ratios. I'm sure there's more ETFs out there that you can look at, but the first one was Windy. At least I'll call it Windy, Global X Wind Energy ETF. And then the second is iShares ETF. I actually have owned this one already, specifically because it is the lower expense ratio. It has been performing quite well. I actually put money into it right when the war started, just because I felt that any type of energy stock would be a good place to put money at the time, and it has done quite okay. It has came off its highs, but I do believe that I will just keep my money in there and just let it ride. So where are the war trades around this, which is more an immediate thing? Well, these are the trades that went up, have came mostly down, and where are they going now? I believe that they're actually have legs to go back up. I think most of them, maybe not shipping. I do believe that shipping does too. But these are all trades that have been. I've been in all of these trades. Yes, I have been in all these trades since the war started, in and out of several of them. So shipping, the reason why I got into shipping is because the YouTube channel What's Up with Shipping, they're talking about how shipping rates actually have a war premium on shipping rates. So it's like, hey, if the shipping companies get to charge a premium, then their stocks are going to go up, and they did. I do believe I got out of that trade, and shipping companies actually, it must be the war premium went down because the stock price went down. I don't know if that was just because everything else was going back down, but I'm actually going to probably get back into that trade because I do not think this whole ordeal in Iran is over by a long shot. So yeah, and then drilling and exploration obviously is a war trade, along with gas and oil. And then fertilizer. Yeah, a lot of the fertilizer, aluminum too, by the way. There's a lot of commodities that come through the Strait of Hormuz, but fertilizer is definitely going to be impacted. There is more than just urea, and there's a few other things, but say urea is coming. A lot of the world's urea comes out of the Strait of Hormuz, I'm looking at this as a global fertilizer trade in general. I'm not singling out just the petroleum-based fertilizers, although I do believe that those have the biggest gains. So I've actually singled those out a little bit, but I do believe things like potash might actually be worth more also. But that's just a guess. That's not because I know that. I do not know fertilizer enough to actually, that's more me speculating, I guess. But so yeah, another thing you should know is it's kind of crazy, but shipping has amazing dividends. So all of these companies that are in shipping that I've looked at, they have amazing dividends. So if you're a dividend investor, I think these companies are great to be in for the long haul. I mean, they're just stay in them forever. I mean, these companies have dividends, and I think they're all above. I think they're all above 5%, and some of them are as high as like 8%, I believe. It's amazing numbers as far as their dividend yields. And like, if you're a dividend investor, these are companies that just seem like sure bets for dividend investors. Drilling and exploration, a company that I'm actually looking for all the wrong reasons, WTI. WTI is actually an offshore exploration company, but WTI is not West Texas Intermediate, which most is a type of oil. Most people invest into it, I believe. Same reason why there is Zoom and there's two Zooms in the pandemic, and everybody invested in the wrong one during the pandemic. So it got shot up, and because people were investing in the wrong one got shot up during the pandemic, and eventually they had to shut it down. And I believe that the same thing will happen with WTI, because most people are thinking that they're actually going to be investing into the actual commodity when they're actually investing into an offshore exploration company. I don't know if that's true, but that's just me playing around with a stock right there. ExxonMobil, obviously, exploration company. They're more than that, but Noble Corporation is another big one out there. Very good. Great companies to be in for the long haul, no matter what. These are good companies. And I don't even think that's just even for any given time. These are companies that you can just ride out for the long haul. Fertilizer companies that I've been looking into, this CRV Partners, they actually go and manufacture ammonia and urea. These are very much petroleum-based fertilizers. I actually own this company right now. I'm going to keep owning this company. I do believe in the not so distant future that this company has potential. This just feels like the right bet to me. Other companies like CF Industry Holdings and Nutrient, I'm just putting them here because I just believe in this sector, not because they are actually producing petroleum-based fertilizers that I know of. They may be, but I'm just putting them there because they're in this sector. and I do need to research these more, which would be great to go to my friend's site to check them out. And I'll put the link down below. It'll be, I hope you guys check it out because it looks like a very interesting way to investigate stocks. For gas and oil, there's USO, which I believe is one of the biggest funds for oil. I don't know if, I think this is an ETF. ProSure shares ultra crude oil. It's actually levered. So your gains go up, but so do your losses. And right now I'm actually down on this. But if things happen the way I expect them, this should have some really big gains for me if the oil prices go up. So please go up. But yeah, this is a levered stock. I do want to highlight BOIL also, and I'm not highlighting it because I want you to buy it, because I want you to compare BOIL with UCO and compare levered stocks, because they're not all the same. And I'm going to show you the next two charts to show you why. Because you want to go to the 5-year chart, and this is UCO. This is a levered 2x, I believe it's 2x, over 5 years. And you can see over 5 years, it still has a gain, which means the beta, or the amount that they take out of the stock for the daily adjustments because it's levered, must be very small for this. Whereas if you go to BOIL, it's minus 99.63% over 5 years. And that, I do believe, is because the amount they take out for the daily beta, or the amount they take out for the daily adjustments, just eats up your profits. So when you actually invest into a stock that's levered, go to your 5 and 10-year charts and see what's happening. Because if you see something like this, it ain't worth it, because this is disgusting. So some other plays that I'm looking at, Bloom Energy. Bloom Energy is also an AI play. So if you believe that AI is going to hit a crash, this might not be your company to go to. That being said, it's an energy stock also, because if AI is going down because of energy, then more AI companies might be investing into energy. So maybe this is actually a good play because they'll be doubling down into their energy infrastructure. And this is, Bloom Energy basically makes it cheaper for the AI energy, for their energy costs. So maybe that is a good bet. But either way, same thing can be said about Schneider Electric. I've actually bought into this and already sold, but I think I might be buying back into it. But it's also an AI-driven energy optimization company. It's not just that, but it does have a sector that optimizes energy for AI-driven things. And then here's an ETF that is a good play, that if you just want to throw your money at an ETF instead of an individual stock, I do believe I own this one. Yeah. So those are my energy trades that I've been looking into. I'd really like to know what everybody else is trading. Leave a comment below. Also, I'd love to know if you check out my friend's website. I'd love to hear what the feedback is on that. I'm very interested to see how that site makes it, because it looks interesting. Anyways, take care and good luck. Bye-bye.